All right, welcome back to the Elias Macco Show. Let's take a look at how the Caisse de dépôt et placement du Québec, you know it as La Caisse, is doing. One of the largest institutional investors in Canada, of course, a part of so many pension plans in this province. They released their results for the first 6 months of the year. They're posting a return of 4.6% over those first 6 months of the year. Is that good? Is it bad? Should they have just given the money to Arnie Zwaig, our next guest? Let's find out. Arnie Zwaig, portfolio manager and senior wealth advisor with ScotiaMcLeod. Hi, Arnie. Welcome back to the show.
Thanks for having me. Good morning.
So, listen, obviously the Caisse has different goals in investing than other firms or advisors, all that kind of stuff, right? But all things considered, how's the Caisse doing right now?
So it's interesting. So despite their positive returns, the CEO and president of the Caisse actually stressed that the environment remains uncertain for investors. So saying that and having a rate of return of 4.6% in the first 6 months is okay. They outperformed their benchmark, which rose 4.3%. And last year, this time, their return was 4.2%. Now, if we dig a little deeper, Elias, what we'll see is that the rate of return in the first 6 months on the individual stock markets, whether it's the Dow Jones, which was up 3.5%, or the TSX, which was up 8.5%, seems better. But here's the difference. There's a question of asset allocation. So in the case when you compare to a pure stock index, you don't have hard assets, you don't
Mm-hmm.
have fixed income, you don't have real estate. There are a whole bunch of things that aren't included, private placements. So when looking at the case, you have to look at their benchmark, and they've created a benchmark that they compare against. So
So, what is that?
4.6%
What is
is
that
okay.
benchmark? What is that? So, describe that. So, they're comparing themselves to this benchmark. Who comes up with that benchmark? How do they compare themselves?
Well, they've created their own reference portfolio to use as a benchmark because when they invest, they are investing in private corporations, private equity, but fixed income, actual buildings, real estate. So and internationally. So they've created a benchmark so as to compare themselves against, and infrastructure, for instance. So they're doing a good job at investing for our benefit. But it was interesting to hear that the case when speaking yesterday, they specifically mentioned that they took on some stock risk during the sell-off in April, and that
Aha.
improved their stock's performance. So they squeezed out a 6-month 6% rate of return on their stock component, which is better than the 5.5% of their benchmark or reference portfolio.
Now, of course,
But
they could have sold everything, put it in NVIDIA, and been up 35% this year, right? But they didn't. They got to be less risky than that.
Well, that's right. They have to actually be quite well diversified. Some of the interesting points, though, was that they indicated that the real estate sector really underperformed their
Mm.
benchmark. And they also mentioned that since the beginning of the year, they sold $8 billion of their holdings in private Quebec companies and reinvested four. So and they did that because of the pending economic slowdown. So
Uh-huh.
all in all, they did well for us.
We're with Arnie Zwaig, portfolio manager, senior wealth advisor with ScotiaMcLeod. Arnie, how much power does the case have? And I'm thinking about other big funds in Canada. I think it's the Ontario Teachers Pension Fund, which is another big behemoth there. How much power do these institutions like the K's have?
Lots. The case's assets have increased $23 billion since the beginning of the year, and it's reaching almost $500 billion.
Wow.
And of course, they manage our pension money, the Régie de Rente. of Quebec, as well as they manage funds for 40 odd other people. But you mentioned Ontario teachers, and just as a point of comparison, they posted a 2.1% return for the first 6 months of the year. So we
Oh,
more than
wow.
doubled that.
Wow. So that's, I mean, that to me is a better benchmark. How they doing in Ontario, and we doubled them. But before I let you go here, Arnie, I know you've been on this show before. We've talked about Warren Buffett, okay?
Yes.
Berkshire Hathaway. I just, he's been sitting on a big cash pile. I saw some news items go that they're going to announce, like, isn't Warren Buffett going to announce like a big company that he's invested in, and of course he's been sitting on a pile of cash, and we've talked about the U.S. economy and investing in U.S. Stocks right now. I don't know if you've got a thought or two on that end, on that.
Well, it's interesting to, you keep saying Warren Buffett, but is it really him driving the bus anymore?
Aha.
So, I think that's what investors are waiting to see. It was just recently that the Berkshire stock had outperformed the S&P 500 for most of the year, and it's just in the last little while that they started to drop off a little bit,
Hmm.
and versus the S&P 500 because they have all this cash. And the real question will be, or I'd love to see some big deal happen. But Buffett, before he retired or stepped down as the bus driver, basically continued to say that it's harder and harder to find deals large enough to move the needle. And
Hmm.
but talking about both Buffett and the case, I think the important message for our listeners is it's based on asset allocation choices that you make. And for our average listener, that means, Elias, identifying your goals and determining the risks you're prepared to take.
Hmm.
And if the Financial Planners Association of Quebec use a benchmark rate of return of just over 5%, I don't think you should always be aiming for the fences. Singles and doubles work well.
Yeah,
So,
that's right. You,
yeah,
you you hit singles and doubles throughout your career. You're going to be pretty happy at the end of it, right?
amen.
Arnie, always great talking to you. Come back real soon, okay?
Talk soon.
That's Arnie Zwaig, portfolio manager, senior wealth advisor with Scotia McLeod.